Ladies and gentlemen, welcome back to the channel. Tesla stock is about to explode higher, in my personal opinion. In today's video, we will be going over exactly why that is. I'll give you an update on the government shutdown and that whole shabagle, and what to expect once that ends. Okay, we're gonna talk specifically about Tesla in today's update for the most part. Okay, the fact of the matter is we do have to cover what's happening in the broader markets. I know we all hate politics. Like, I hate both sides. Okay, I hate one side more than the other, but it's the whole system is broken. The whole thing is broken. Okay, and that's unfortunate. And it's unfortunate that this has been such a driving factor of this market. But unfortunately, you know, Tesla can give us all the best news in the world. Things could be going great. But if you get a 40-day government shutdown that is rocking Wall Street's world, there's nothing Tesla can do about that. You got to get that situation solved first. And I think today was another good example of what I've talked about on this channel for a while now. Like, it doesn't matter about anything else when you're looking at the possibility of a recession. Now, that's not my view, but we'll talk about it in today's episode. I do also have a clip from CNBC I really want to share with you. Maybe I can find it in one of my 500 tabs open. It says here, everything will rally into year end, says Wells Fargo's Oshun Kon? Maybe I said that right. I you know, I'm bad at names, so like I probably shouldn't even try. But yeah, we're gonna look at that as well. And yeah, new images of 3i Atlas showing anti-tail. If you guys have been following that situation, let me know your thoughts on 3i Atlas down below in the comment section. Is it an alien spaceship, or is it more natural? I don't know. It's looking a little weird. Yeah. Nonetheless, hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys want to come find these under the radar AI stocks with us. In fact, I just invested in a company that 2 days ago massively raised guidance. They have a partnership with IBM. They are in, I guess, talks with dozens of companies and governments for their products right now. That's why they raised guidance. And the stock's trading at less than 2 times sales, and it grew at 475% last quarter. That's how crazy this market is right now. Like, it literally does not matter the valuation, what's going on with stocks right now. In this market, to hell with it. Doesn't even matter, okay? And I think that's a massive opportunity, and we just started that position. So if you guys want to come join the group, check that link out down below, and let's get started. And again, we kind of covered a lot of that in the intro, at least what we're going to talk about from a broader markets perspective. But here's my idea and my understanding. Right now, the markets are selling off for one reason, one main reason. Earnings were great. No problems with earnings, okay? AI is alive and well. The story is largely the same. What has happened is we are faced now with a 40-day government shutdown. And yeah, it looks like it's going to end tomorrow, but that's only part one of a 2-part series here. It's like watching the, you know, entire series of a TV show and then not watching the last 2 episodes. It's like, oh, okay, this is stupid. And I honestly do that. Like Yellowstone is funny. I watched all 5 seasons of Yellowstone until the main character, and then I stopped watching it because it was annoying. Yeah, topic for maybe not even another video. There's only so much that can happen in a market like this when the fears of a recession are as high as they are. See, before the government shutdown, we all had the idea that the economy was not in a recession, not booming, kind of plateaued, if you will. Like, data centers were rocking and rolling, and that's where a lot of the growth was coming from, but the actual economy was neither growing too much nor contracting too much. Well, lay off millions of government workers and cancel hundreds of thousands of flights at this point. And yeah, Wall Street thinks that things are really bad out there. And while they're probably not great, they probably have deteriorated a little bit in the last 2 months. I doubt they're nearly as bad as Wall Street thinks. Okay, I think Wall Street is way over their heels in the bear case, right? The fact of the matter is, the US economy is so diverse, it's very hard to go into a recession. Like, if you guys don't know, I recently went on a cruise. If you guys have not done a cruise, you guys got to do a cruise. So much fun. If you're scared of water and boats, like, don't even worry. It's like you're in a floating city, like a floating mall here, floating Central Park here. You get the idea. That was amazing. Aruba, Curacao, a couple, Dominican, and another stop. But nonetheless, we drove to Florida. Yeah, never doing that ever again. But we drove to Florida, drove back, and what kept popping in my head is, look at all of these people with their own lives, their own jobs, their own bills to pay, their own worlds going on. And then think about everyone everywhere doing that, right? The economy is so diverse. All the truck drivers, doing their thing. Like, this is not the, 20s anymore, 1920s where, or 1910s when, like, a lot of the economy was railroads and, autos. Like, it's a very diversified economy. So nowadays, you really don't have recessions unless you have many different industries going into a downturn at the same time. And while this is not great for certain areas, the government shutdown, of course, I don't think it's enough to cause a recession, even if the economy was not exactly red hot when we started the 40-day long government shutdown. See, what's going to happen is the government's going to reopen. We're going to get economic data that shows the economy is better than feared. We're heading into the holiday season anyways, okay? The economy is going to be better than feared. Wall Street's going to go, oh my gosh, we were bearish for no reason, and start buying stocks again. Risk on is going to resurge, and Tesla is going to lead that, okay? Why do I think Tesla is going to lead that? Partially because it's been, leading, if you will, in this market right now. See, Tesla, high valuation, just like other, small caps, okay? Tesla sitting pretty close to all-time highs relatively, whereas other stocks are down anywhere from 20 to 60% in the last month. High quality companies at that, growing very fast. Nothing has changed with their businesses. Like, I literally have one stock that is down 59% in the last month, where there is literally not a single change in the business. There has been zero news, neither good or bad, yet the stock is dramatically lower. And that one as well is only trading at about 2 times sales. Tesla, on the other hand, trades with a PE of north of 100 that just approved Elon's compensation package, which is good, but is very much diving into very high growth industries. Okay, that sounds great. That sounds really good. But from the Wall Street perspective, when there's recessions, you don't want to be in those areas. You want to be in the Coca-Colas or the healthcare names or even the Apples if you had to be in a tech stock, right? And the fact that Tesla has held up this well, I think it's going to be one of the strongest leaders coming out of this market into the end of this year. I think even the compensation package from, Elon and the board getting that approved for Elon has not been reflected in Tesla stock thus far. Now, in option activity today, despite Tesla falling about 1.5%, including the move lower currently in after hours, you have 78 different trades totaling $382 million. Earlier today, like 2 hours ago, you were only at $30 million. So that option activity really started to ramp up into the end of the day today. Now, the government might reopen tomorrow. We'll see. I don't know exact timing. A lot of people have speculated that it would be later in the day tomorrow. Like, that's not something we're going to wake up to tomorrow morning. I don't know, but the option activity did ramp up, and you have a positive order value of 71%. If you take a look at the shorts, it's not giving us, it's not giving us any new numbers today. I don't know if it's because it's Veterans Day or what's going on. Shout out the vets. By the way, if you serve this country, thank you for your service and everything that you've done. Hopefully you are out there doing well. If you're watching this video, you're probably doing okay. So happy to see that. Nonetheless, the short interest sitting at about 2.5%, and you do have 73 million shares sold short that are going to be under a lot of pressure once this government reopens. And in my opinion, we get better than expected economic data. Now, I haven't really talked about this too much on the channel, but why I think we're going to get better than expected economic data is because we got better than expected earnings. And simply put, 80% of S&P 500 earnings come from the economy. Okay? 80% of earnings come from the economy. The economy dictates earnings. Like, if you go into a slump in the economy, earnings are going to slump, a 100% guarantee. Every single time that will happen. Okay? Without exemption. Okay? Well, earnings were great. Earnings were better than expected across the board. This was a really good season so far, and we still have a bunch of small caps and mid caps that are going to be reporting over the next couple of weeks. Nvidia is still down the line a little bit. I think Nvidia is typically towards the end of the month, so like November 25th or 27th, something like that, if I were to guess, maybe 2-3 weeks from now. But you get the idea. Things are great as far as earnings are concerned. The economy's not red hot, like there's definitely some pockets of weakness, but it's not enough to give you that broader recession in the economy that Wall Street is nervous about. Okay, and simply put, once the government reopens, Wall Street is like right here. Like if this is super bearish, like on the bottom, and this is super bullish, Wall Street is like right down here. Like, not quite sell everything, buy gold, recession, blah, blah, blah. But they're like right here. If the bottom's right here, they're like right here. They're like one bad jobs report away from saying to hell with this, okay? You've already seen the small caps say to hell with this. You've already seen the selling in the risk on recession vulnerable areas. Whereas I think the economic data is going to show things are a lot better than feared. Are they great? Obviously not. But they're not as, disastrous as Wall Street is currently thinking they are. Now, we do have some earnings coming out throughout the rest of this week. Circle in pre-market tomorrow. Arcos Dorados, that's the largest McDonald's franchise in South America, if you did not know. Wednesday and after hours, Cisco. Thursday, Walt Disney, JD.com, Billy Buy in pre-market. And then Thursday and after hours, you have Red Cat, Applied Materials, New, and Virgin Galactic. You're going to, again, have a lot more earnings over the next couple of weeks. But earnings have been better than expected. And specifically what I pay attention to are the banks. Well, what are they saying about the consumer? What are credit card companies saying about the consumer? Like, if you're a family right now and you're really struggling, you're going to say to hell with this credit card long before you don't eat, right? You're going to say, fuck that credit card. I could give a shit less and, run that whole card up and cut it up once you're done, right? That's what people are going to do if they're really struggling, if they're really like down bad. You're not hearing that. You're hearing credit card companies saying that there's some stress out there in some areas, but things are largely unchanged. That's what you heard all earnings season. Chipotle and others are doing a little bit worse, but that's just the cost of doing business when you're selling $15, $20 burritos. Like that's not sustainable, okay? But it's largely the same situation. Now, with that said, we're going to talk a little bit more about all of that in just a moment. Let me know your thoughts, though, down below in the comment section. Do you like, that's the only thing that matters at this point. Do you think the economy is better than expected, than 60,000 negative jobs last month? maybe even higher than that at this point. Do you think it's worse than that? Do you think we're at 100,000+ jobs lost last month? Or do you think it's kind of in line with estimates? Now, I would say even an in line kind of a number for the jobs report for October might be seen as good news at this point, just because so much of this market is washed out, but time will tell. Now, Wells Fargo says everything will rally into year end. Take a listen. This clip's only about 3 minutes, 50 seconds long.
Good to have you here.
Thanks for having me.
You're calling for an everything rally into year end. Tell me more.
Yeah, so we're targeting 7,100 by year end this year. Yeah, I think everything's going to rally. The market is starting to broaden out, and we see about 5 reasons why we think everything's going to rally. Number one, seasonality, especially for the laggards. November, December, and January are the most positive months for the laggards. Number two, the AIPA tariffs potential refund. We saw the hearing last week. We expect the ruling sometime in December or January. I think there's going to be a reflation trade into that event. Number three, the tax return. The tax return is going to be bigger this year because of One Big Beautiful Bill. We're talking about $800 per person on average versus last year. So that's going to be another reflation event into next year. Earnings were positive and potential government reopen sometime this week, hopefully.
What do you think?
I mean, I think all that stuff is in place. The question I would have is to what degree we're kind of already getting positioned for some of that, because the market, I think, has done an interesting job of looking through the here and now signs of softness. I don't know how we treat the ADP number today, which showed, net negative job growth in the last few weeks. Consumer cyclicals have been kind of wait and see. So I wonder whether that tax refund bump is something that we still have to look forward to and is not yet in the price.
Yeah, I don't think it's in the price yet. I mean, obviously, consumer stocks have gotten, they got hammered over the past 2 weeks or so. Our sentiment indicator actually triggered a buy signal. It's a contrarian signal. So sentiment actually has gotten really negative as of last Friday. So historically, when our sentiment buy signals triggered, we saw the S&P 500 rallying about 7.5% over the next 3 months, being positive 90% of the time. So this is a very strong signal that we got.
How reliant do you feel like we need to be on the whole AI trade? I mean, it sounds like, yes, we're obviously going to have to rely on it to some respects. The stocks are the biggest ones in the market, but you started out by talking about a bigger broadening trade.
Yeah, I mean, I'm still bullish on AI as well. I think this AI CapEx cycle is still in the early innings. We called it the 4th inning of the AI CapEx cycle. One area of AI that we're getting a little concerned about is hyperscalers, because I think this CapEx cycle is almost like mandatory CapEx for hyperscalers that they have to spend to stay competitive. And if that's
why they call it an arms race.
Exactly. And if you look at their free cash flow margin, it's going to an all-time low. If you look at their free cash flow as percentage of earnings, it's going down to 50%. It used to be 100%. So those are some of the concerns that we are seeing, but that's actually great news for AI semis, hardware, and power companies. And I think those are the areas that are going to carry the market.
What about the point about the hyperscalers?
There was a whole chunk of this year when I would say I was surprised that the market was rewarding the spenders and the vendors equally, right? And now it's, Meta's getting punished for whatever it's going to do. If you look at Alphabet, which has been a great stock, and everyone thinks they kind of have, a pretty good exposure and strategy when it comes to AI, next year, they're going to turn 13+% revenue growth into like 5% earnings growth. And the market seems okay with that right now, but it's not clear to me that that's going to be the rule for every company, where if they perceive to be on a treadmill of spend after spend after spend, and it's not like you get to a certain point where you can reap the benefits of scale, then I think some stocks are going to come in for the meta treatment, most likely. And I think that's also where this Michael Burry debate is. It's not so much, it's not accounting shenanigans. It's how much persistent value are you getting from what you're investing in right now in these GPUs, and how much do you have to replace them perpetually over time.
Wall Street wants to know what the jobs number was for October. Again, those estimates are really bad, but we are going to be getting, as long as the government opens tomorrow, the CPI report and retail sales, business inventories over the next 2 days. And I think CPI is going to come in lower than expected. And I think retail sales at this point are set up to be better than feared, or better than expected is probably the simplest way to put it. And that is going to fuel a resurgence of risk assets where, you have some areas that have done well. Headline S&P, Mag 7, seen as like less risky areas. But risk is in the eye of the beholder, I guess. But I think the small caps, the areas that have sold off a lot recently, Tesla, which has not went up nearly as much as you would have thought, given all of the good news recently, is set up. Those areas are really set up to make a massive recovery into the end of this year and for 2026, which is likely the year of AI. It's Tesla's year next year with Robotaxi, as well as hopefully the start of commercial sales of Optimus towards the end of the year. That's where things really get exciting. And I mean, you literally now have Elon working for you. Okay. Whereas in the past, Elon was not exactly working for anyone. He was not contracted to be Tesla's CEO. Like, he had zero incentive to do anything good for the company. Now that has all changed. That's Elon is your best friend at this point if you're a Tesla stock investor. And I think Elon and Tesla are about to go all in on real world AI, which I think is going to have a bit of a hype cycle next year as well. You know, you've had semiconductors go through the hype. I think the real world appliers of AI are going to be the big winners for next year. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you've not done so already. I've talked about this before. Last thing I want to say, I think Tesla's going to be well above $500 per share by the end of this year. Between $550 and $650 would be my best guess. Anything above $650, I'm going to be a little surprised in a good way. Anything below $550, I'm going to be a little shocked, to say the least. Like, something pretty wrong would have had to happen over the next 7 weeks or so if Tesla's not in the 500s. Like, it's a pretty low chance of that. In my opinion. And you know, that's a really good setup for the next 7 weeks. Not like, we're not talking a long time, we're talking 7 weeks, and the stock could see some pretty significant upside. So again, let me know your thoughts on this down below in the comment section. Hit the like button, subscribe to the channel, blah blah blah. If you guys want to come join the trading community, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.